Hey everyone, welcome back. This is Shelly. Today we are diving into the latest happenings in the US stock market. Just this past Wednesday, we saw a slight uptick, continuing a gentle upward trend from the previous day. The S&P 500 rose by 0.24%, Dow Jones climbed 0.32%, and the Nasdaq gained 0.21%. So what's driving those moments? Okay, let's break it down. Nvidia's earnings report. First up, let's talk about Nvdia. They just released their Q2 earnings report, and it was quite a mixed bag. On the one hand, they surpassed revenue and profit expectations, with a revenue of $46.74 billion, showcasing a 56% year-over-year growth. Their gross margin held steady at an impressive 72.7%. So why did the stock drop by 5% post-announcement? Here's the thing. At this stage, Nvidia's stock price seems less tied to its earnings report and more influenced by broader market expectations and macroeconomics. Investors are coming to terms with the reality that after reaching $1 trillion market valuation, every earnings report is scrutinized under a more complicated lens. So let's break the earnings down. Insights from the earnings. Diving deeper into the numbers, Nvidia's adjusted earnings per share came in at $1.05, slightly above market expectations. However, the data center segment, which has been the core of Nvidia's growth, is starting to slow down, with a growth rate dropping to 56% from the previous quarter's 73%. What's concerning is their independence on the Chinese market. Nvidia didn't sell any new H20 chips during the quarter, and their revenue from this segment was merely from old inventory releases. This raises significant questions about future growth potential in China, particularly with ongoing geopolitical tensions. Market reaction and the buyback plan. Following the earnings release, Nvidia announced a $60 billion stock buyback plan to stabilize market sentiment. While the stock initially dropped, the announcement helped to cushion the decline. This move is both a reassurance to investors and a clear signal that the management is willing to engage in aggressive capital return strategies amidst the market volatility. As Nvidia's CFO pointed out, by 2025, capital expenditures in the cloud services and the large enterprise sectors are expected to reach $600 billion. This means that AI-related capital spending will need to maintain nearly 40% annual growth over the next 5 to 6 years. If Nvidia can capture 50% of the AI chip market, we're looking at potential revenues nearly $1 trillion. So let's say broader market trends, stock buybacks. Now let's shift our focus to a broader trend in the market, stock buybacks. According to a recent report, US companies have announced stock buybacks exceeding $1 trillion as of August 20, setting a record for the fastest time to reach this milestone. Companies like Apple, Alphabet, and JP Morgan have all joined in, driving a wave of buyback that has garnered significant attention. This buyback trend is crucial because it not only supports stock prices but also signals confidence in corporate earnings. Analysts predict that announced buybacks could reach as high as $1.3 trillion by the end of the year. Risks and future outlook. However, it's important to consider the potential downsides. Critics, including U.S. Treasury Secretary Janet Yellen, have argued that companies should focus more on R&D, that's research and development, and long-term investments, rather than solely using funds for buybacks. This raises questions about whether these actions are truly beneficial in the long run. While stock buybacks have bolstered market sentiment, the sustainability of this trend hinges on two critical factors: the potential for an economic slowdown and whether policy changes might limit buyback activities in the future. So let's say some conclusion and call to action. In summary, while Nvidia's growth story remains compelling, the current market environment is complex and fraught with uncertainties, particularly regarding China market. On the flip side, the stock buyback frenzy is providing much needed support for the market, but it's essential to remain vigilant about potential risks. If you found this analysis helpful, make sure to give it a thumbs up and don't forget to leave your thoughts in the comment below. Are you bullish on Nvidia or concerned about the broader market trends? Let's discuss. And as always, hit the subscribe button for more insights. Thanks for tuning in, and I'll see you in next video. Bye!